Okay. Uh, Hi, everyone. My name is Jimmy from Melody Resources. At Melody Resources, we leverage on a decades of retail food industry experience and alliances to explore and provide relevant training, consulting, and support services to food businesses such as a restaurant, bakery, and confectionery. So today, due to demand by small food businesses, I am introducing this highly simplified all-in-one spreadsheet solution for auditing and managing food costs, expected and actual material usages, and tracking of movement of product. This spreadsheet is very suitable for restaurant, bakeries, confectionery, and food production businesses at all levels. People always ask me why spreadsheets are commonly used for food cost and other production analysis, mostly by the food businesses. The simple reason is that spreadsheet allows for both actual and expected material usages to be evaluated inside of the spreadsheet simultaneously, thereby making material usage variance reporting instant and easily accessible. This is not so for regular software where only the expected usage is evaluated inside of the solution. Actual usage has to be calculated externally. Remember, to know if your food cost is within acceptable limit, both expected material usage food cost and the actual material usage food cost have to be estimated and compared. There is also ease of modification when it comes to spreadsheets. Training is very simple. Understanding is also very easy. And of course, it is very, very cost effective. When you compare to the regular software, there is zero networking installation costs. In the case of spreadsheet, remember it is an Excel spreadsheet, so it's just a matter of copy and paste. There are also, these are all benefits of spreadsheet. There are lots more. Now, what are we going to expect from this particular spreadsheet? And let me just highlight some of the reports, that you will expect at the end of this introduction of this food cost template. Number one is, with this spreadsheet, you can easily evaluate your material costs. There is also product gross profit evaluation, material usage variance evaluation across each section. So we are going to have the warehouse section, and then we'll have the warehouse, we will have the production, we'll have the sales point, and of course, the payment detail. This is very typical of every small businesses. Okay, so we're also going to look at material usage efficiency, and this is basically the comparison between the expected usage and the actual usage. Sometimes we call it expected usage, sometimes we call it ideal usage. Then we are also going to look at the warehouse inventory monitoring and control. How can you control inventory, at the warehouse? And then we also look at wastages evaluation across each section, the warehouse or the store, the production, and the sales point. And we also look at the rates of wastage to sales across each section. Okay, and all this can actually be seen at the dashboard. This is where the analysis is going to happen. So we are going to look at each and every one of them today. And then we're also going to look at material reorder level. This spreadsheet allows you, to evaluate, to know your material reorder level. We are also going to look at that, and then forecasted versus actual sales analysis. Okay, and then adjusted sales target for remaining days, prevailing market purchasing power of the market you're operating with, and then lots of other analytical analytics interpretation. So right away, we are going to start talking about this spreadsheet. Now we have the instruction worksheet sheet where you can actually go around, and check all the instruction on it. And here too, we have our contact. You can, if you have areas that you need much more clarification, of course, you can contact us, or you can email us, or you can even visit our website. Everything is right here. So this is the home page. From this home page, you can actually scroll to any of the pages. You can scroll back. You can scroll to any of the pages right from here. And so right away, we are going to start. And for every food cost analysis that we want to do, the first thing you need to do is to go to the material item and list out all the materials, for your product. So here we have already listed some of the materials for a production of a bread. In other words, we are going to use a bakery as a typical example. Remember, I've said this food cost spreadsheet can be used by restaurant, by bakery, confectionery business, and any other food or production business. So here we have listed out the raw materials items, and you can see the unit of measurement here. And then these are the reorder level. In other words, what we are simply doing here is to state each of our reorder level such that once the issuance at the warehouse level get to what we have stated here, it would prompt us to reorder. We are also going to look at that. And then we have the net weight per container, total quantity per container. And let me also say this, that anywhere you see yellow cell or column here, indicate where you should input data. But every other aspect where we have white, those aspects are where the evaluation is taking place. And of course, they have been locked. So this spreadsheet is passworded and locked. Okay, so once you provide all this information, the total cost per container, and then you can also decide to mark up. Let's say you can decide to, mark up any of the items, maybe because of price stability over a period. This template is designed to work, per month. So you can decide to mark up your price such that if there's any fluctuation in the market, it will not affect you. It all depends on how you want to do it. So the moment you finish listing out all your raw materials, we can just hide this by right-clicking on any of this worksheet, and then you hide it. Immediately after that, we move to the product items. We need to list out our product. What are the products that we want to sell? So here we have the family bread, we have the medium bread, there's the unit of measurement, the measurement per portion, and then this material food cost. Of course, we are going to talk about this later. And then this estimated factory cost. Factory cost is just a function of, other costs in the production. Remember, there are wages to pay, there are rents, of the factory rents, insurance, depreciation, equipment maintenance, fueling, and so on and so forth. So this takes care of all those. And then we have the product selling prices also, which need to be defined. So once you define all this information, and then because I've said we are coming back to this, so I will just leave this product item for now and then move to the recipe manager or the recipe converter. So this way you list out all your recipes. As you can see here, we already have the product items. Let me mention again, where you have yellow column, that is the only way that you can list out or input your data. Every other aspect of the spreadsheet has been programmed and so give you the expected results. So the family bread is here and the premium bread is here. How do we get them? The moment you list them out under the product item list, they will automatically, appear here. And then also, let me also talk about this very quickly. This template is designed in such a way that it is case sensitive and it is spelling sensitive. So if you remove this flower, for example, you discover that these things have disappeared here. And then, of course, the result is not going to be appropriate. That's because all the items that you are listed here must have appeared in your material listing items that we hide earlier. So what happened if I don't get the spelling correct? Let me just put it anyhow, you can see that it will tell you not available. So like I said, it is case sensitive and it is spelling sensitive. So I will just put back the flour. The moment I do that, of course, the unit of measurement comes out and the unit cost will appear. And then I input the quantity of material item per mixture. And once I do that, total will just provide the basic 3 informations, and every other thing will calculate itself. So here we have the total material cost per portion, which is more of our food cost now, per portion of the product. So this is the cost that we have here. Okay, and then of course you can also decide to put your factory estimated cost at whatever percentage that you think is appropriate. Usually this you can ask a finance person to evaluate what is your factory cost. There are so many functions that constitute the factory cost, but you can always find a middle ground, so that you can have something to work with. That's why we said it is estimated. It is not really the actual. So you can make it 25%, you can make it 30%. It all depends on what constitutes your factory cost, which is sometimes the volume of production, the staff wages, and every other. There are a lot of fixed costs, there are a lot of variable costs. So you just consider that. So once we do that, we list out the recipe, we list out the product items. I just want to hide those 2 items so that I can have very few worksheets, to play around with. Okay, so the next thing we are going to do is to come over here to the payment details and begin to define which month are we working with. Okay, you can just click here and then this drop down will come up, so you can select. You can just put the month of June. And let me also remind you that whatever month you select here, every other aspect of the template where the date is required, they are linked to capture those information. So the next thing you also do is to select your working days. How many days are you going to open for that month? If it is 31, then you can choose 31. And then here, you now type in your sales target for that month. Let me just say that the sales target here is 1 million naira. Okay, so the currency is set at naira, which is the Nigerian currency. You can use any currency symbol that you wish. Okay, if you are using it on any other part of Africa or on the world, you can always set it. But let me also say this, that is a very simple and easily designed spreadsheet. It's a spreadsheet, so it's just meant, to help small food businesses. So once these parameters are defined, then of course, as you know, in a typical food industry, material move from procurement to the warehouse, from warehouse to production in form of raw material, from production to finished product in the raw material, and then from finished product to the sales point where it is being converted for cash. So that is exactly the kind of workflow that we are going to follow up here. But let me also explain about the dashboard. This is the dashboard where all the analysis is going to be taking place, which we are also going to see at the end of the day. So let's quickly move from the warehouse. So this way we have the warehouse. As you can see, all the raw material have already been defined here as you are listing them in the raw material item list, which we had it earlier. They are going to appear here, the unit of measurement and the unit cost. So here you have columns that represent each day of the month. So you also have column for opening stock, for purchase stock, actual closing, and then any bad product, you can list them out here. Now, issuance has been, programmed in such a way that at the end of the day, it's not necessarily what the warehouse said was issued for production or for the sales point. In the case of drinks, it is basically what those other sections said they received. So if I said, for example, I want to start with flour, let's say the warehouse on the month of June, first month of the June, open with 5 kg of flour, and they receive one bag of flour is 50 kg, let us assume. And then let's say they close with 10 kg. And then was there any quantity bad? No. Okay, so you can see what is happening. It's telling us reorder here. What this reorder simply means is we have set our reorder level. Let me quickly go back there. You can just right click on hide and bring out material item. Is important that I talk about this. So you can see reorder level. We said once our flour get to 100 kg, okay, this so that the spreadsheet should notify us so that we can reorder. So that is exactly what is happening here right away. So it has told us to reorder because our actual closing is already 10 kg. But what happened if our actual closing was more than 10 kg? Let me say 150 kg. What will happen? Of course, it will tell us that we are still good to go. So our stock level is okay. Okay, so maybe I will just use this for the purpose of this presentation. Okay, so this is at the warehouse level. Now, this variance is coming up because we have not yet identified if this 50 kg, was issued to production or not. Remember, it is not about them saying I've issued out to production. It's about production confirming the receipt of this. So the moment we do this, we move to production. Okay, and of course, in a typical food business, you use the SIV, stock issue voucher, to issue your material for production. So this is where we have production raw materials. This is production finished product. So our focus at the moment is on raw material that were received from the warehouse. So let's say production did not receive anything. And let's say, okay, we have 55 kg variance coming out here. So we are going to assume that production have received 55. And what will be the closing? Let's say production close with 5. Sometimes they don't close with anything depending on their production. So it's also a function of production. Now you can see, if you look at what is happening here, it's telling us that they have received 55 kg of flour. And then the expected closing, of course, is 55 kg, which is this 55. The reason why it is still 55 is because there is a provision for expected usage or the ideal usage. And this is now a function of what this 55 kg was used to produce, which we are still going to talk about. Okay, so until we are able to get the expected usage, the expected closing will still be telling us 55, but the actual usage are reduced by 5 because, we are closing by 5. So 55 minus 5 gives us actual closing physically, but the expected closing is still 55 because we have not yet known what was produced. Okay, and the usage efficiency has not yet highlighted because we don't know expected usage. So let's see what happened at the warehouse. As you can see now, at the warehouse, the 55 has appeared here. Okay, so production have confirmed that the 55 kg was received. So now everything is okay. There's no variance again. So we move to the production. So the next thing we want to do is we want to know how was, this 50 kg variance, what happens to it? What was it used for? Okay, so that's where we move to production finished product. Remember, all this worksheet, you have to have a supporting document, like a source document, which each section is going to use, to write down or record the material they receive. Like in the case of the SIV. SIV is the source document for items that was received by production from the warehouse. And then you can have the production book. They have to be a physical record where you can use as a source document to fit this worksheet, so that at the end of the day, you'll be able to have a clear picture of the items utilization. So here we are going to move down here. Here we are dealing with product. As you can see, this finished product, FBFP, finished product. So we are going to assume that, okay, production did not finish open with any family bread at the beginning of the month. So what quantity was produced? We are just going to assume that, let's say 30 pieces of family bread, was produced. And was there any closing? We are going to assume that there was no closing. Was there any discard? Here we are going to assume that there was no discard. So here we have another H1 variance because we have not yet confirmed if what was produced by production was sent to the sales point. So as you can see, sales points have not yet confirmed the receipt of these 30 pieces. That's why it's coming in here as variance. And remember, there's no closing stock. If let's assume that we close with 30, that means there must have been no H1. So this 30 will have automatically becomes opening stock on the 2nd of June. As you can see, it's only on the 1st of June that you can input your opening stock, which is your closing stock for the 31st, of May. So every other subsequent days, whatever you close with automatically becomes the opening stock. So we are still going to say that, look, we did not close with anything. So we have this variance. Now, because there was a production of 30 pieces of family bread, now what will happen? You can see now that the expected usage have come out. What happened is that in whatever that they claim to have produced, this quantity will go to the recipe manager or the recipe converter, and it will convert those produced product to the constituent ingredients. Okay, and this will now come out here as the expected usage. And here, from here now, you can then do a comparison between the actual usage and the expected usage. Whatever happens here, the variance will come out. And once the variance comes out, you now have your stock efficiency coming out, telling us that, look, the usage is very poor, because stock efficiency for a good efficient utilization of the raw material, this guy should be from 90% upward. So here we have a very low efficiency. Let's up our production. Let's say 50 pieces was produced. What will happen? Of course, the usage efficiency have increased, the variance to have reduced, and then so it all depends on what your recipe says. At the end of the day, there will always be variation, and then from here you can know your stock variances, you can know your usage efficiency, and the product. Now, there error here that is appearing. This error is simply telling us that we have used these raw materials to produce the quantity of family bread that we produce, and then there was no way that we got this material. So the question is, where did we get the raw material to produce this item? So if we have opening here, and let me say I have one here, you can then see that the error have started, facing out, telling us that, okay, there was actually physical material to produce what we were able to. So it's just to fill in all these guys. The moment you fill them up, physical stock availability record, and then this error will disappear. And then here you can see your month to date summary. Empty, this simply means month to date, from the beginning of the month till as at the date that we are working with. So everything will appear here. So from here, we now move. This is already for the finished good. So from the finished good, we move to the sales point. Here also, I'm going to assume that we didn't open with anything. And remember, at the production level, what we have here is 60 pieces variance. So I'm going to assume that I receive 50. The moment you fill that up, also the variance will disappear, telling us that sales point have confirmed the receipt of the 60 pieces of family bread. So that is just the beauty about the template. That is how it works. If there was no return here, you can just put 0. Here you can put 0. Quantity close. Yeah, it all depends. Did we close with anyone? Yeah, if we have closed with anyone, just put 0 there. Then the actual closing, was there any actual closing? Sorry, yeah, actual quantity sold, not actual closing. So the actual quantity sold is, this is for stock monitoring and control. So you are going to use this to compare with the actual product that was sold, at the cash point, using the cash machine or the machine that we use to receive. So whatever quantity that the machine captured, is the quantity that we are going to put here. Let's say your machine captured 55. What that simply means is the salesman received 60 pieces of family bread, and then 55 was captured by the machine, and that gives us a variance of 5. So it all depends on how efficient that the cashier that is receiving payment is. Okay, so here we now move to the payment details. Okay, so this where is basically for the payment details. And remember, for every transaction we do, at the end of the day, we'll know the number of orders that we took. So we are just going to assume the number of orders to be 15. And let's say our payment here, just want to be conscious, okay, here we have 55,000. So let's say our payment was, just put this 50,000. And then I put here 5,000 just to make it balance. And then there was no credit sales. So the moment we do that, and then there's also a provision here for withdrawal for expenses. That is, if there's any withdrawal from the withdrawal from cash to take care of one expenses or the other. This is very common with small businesses, even though it's not advisable, but sometimes it happens. So if there was, then you put it there. If there was not, then you just put 0 there. Let me show you what would happen if there was any expenses. If you put any expenses, of course, that will reduce the expected banking, telling us that the money, that the cash payment that we need to bank has been reduced by 5,000. And then here also take care of what exactly was banked. Let's say the same 45,000 was banked. If it's banked, then it will tell you that it is balanced. So you key in the banking date, the teller number, and whoever handle the actual banking. So once you do that, you now move to the dashboard. Okay, as you can see, the graphs have just been plotted. And we are beginning to see we have expected versus actual sales here. This is where you can actually look at your actual sales versus the recorded sales. Remember, the actual sales is a function of everything that appears here, while your recorded sales are what appears here. So you now look at if there's any variance between the two. If there's variance, of course, the variance will come out here. Let's see what would happen if, let's say here we did not have any debit payment. What will happen? Okay, we already have a variance of 5,000 naira that comes up in red. Okay, so we move from here to here. Here you have your raw material. Remember, we have already hidden the material item list. So if you want to call up any information about your raw materials, you don't necessarily need to go back and then bring it out. No, you just go here and then call up any of the raw materials, that you want to, analyze or look at. The information has been listed here. We have unit of measurement, net weight, the major information that we need to have, concerning that particular raw material. They are already listed here, so you can always call them up. This is just the month-to-date sales trend. This is just a trend of the sales as you are inputting your recorded sales. The graph will be plotting itself to tell you the trend of your business. So this for finished product. You can also come here, click here to get information on any of the product. And then from here, we now move to this is the sales and order analysis. So this way you list out all your sales information. We have the number of days, which is 31. Remember, we have already listed all this information here when we started. So they are being recorded here. The 1 million, which is your sales target for the month, is here. Your average budgeted sales appears here. Then you have budgeted sales, which is this is just only 1 day. If we have more transactions, then definitely that will increase. Let's say on this date, we did another transaction. I don't know, I didn't really capture that properly, but as we are keying in here, will increase. Now it is 2. So we just multiply this and this to have your month-to-date budgeted sales or the expected budget that you are supposed to have. And then here you have your month-to-date total sales, which is the sum of all the sales that you have made so far. This is 50,000. And then from there, now you can see here, month-to-date targeted ADS for remaining days is telling us good job. Why is it saying good job? It's saying good job because our month-to-date actual sales, recorded sales, is greater than month-to-date budgeted sales. So it's telling you that, look, you are selling more than your budget, so you are doing a very good job. But what happens if we are selling less than our budget? Let me say we have 20,000 here. I'm just putting it for the record purpose. You can see this have changed from good job to another value have come up here, telling us that, look, as at the beginning, this was your budget, sales budget or target, but this have changed to, instead of 32,200, is now 32,600. So this is what we are expected to sell for the remaining days of the month if you are to meet up this target. Okay, so you have your target performance, you have your average orders, and then you have your purchasing power. This tells you, the market that you are operating with. What is the average purchase pay each order that is being taken? Thereafter, we now come in here. Here we now look at the actual sales. Of course, we already talked about this, recorded sales, and then sales deductions. Okay, sales deduction, that is just withdrawal for expenses. That's going to appear here. And then we now have month-to-date raw material procurement. How much of procurement have we made in the beginning of the month till the total value is going to appear here, so that as you are procuring, you can actually be in control of what you are procuring. Then immediately after that, we now look at the wastage and food cost analysis. So we look at the wastage cost analysis at the warehouse, at the production, and at the sales point. So let's say at the sales point, I think some place we didn't input wastage. So I just want to say it here that under family bread, I have 10 pieces of family bread that was expired or bad. If I input that, if I come here, then my wastage at the sales point, which is at the cost of the raw materials or food costs, have come up. And this is telling me that, look, I have a wastage that is 42% of my recorded sales. Okay, this is very high. And then the same thing happens at the production with the finished good. If I have a discarded product here, let me say 5 that were discarded, that will also, come up as a value here. And then let's also say that at this point also, I also have another 5 kg of flour that was discarded that will also add up, because this is under production. And then similar thing at the warehouse. If there's any wastage at the warehouse, it will appear here, and the percentage of the recorded sales will also come up here. Then here it talks about the food cost. We have expected food cost, actual food cost, and then the food cost variance. Remember, food cost is a function of the raw material that went into production. So here we have 30,810 for expected food cost. So for expected food cost, we go into production raw material. This is the expected usage. So we are valuing all this, by the unit price to get the amount that we have here. And then we do the same thing for the actual. We also value, this, which is the actual usage. So that is what we do in order to get this. And then this is the percentage with respect to the recorded sale. Remember, this is just for a presentation purpose. If we key in information properly, the real result will come up. So that is that for the dashboard. And then that is for the instruction, and this is for the home page. So if you are interested in this, trust me, it is available. It's very cheap because it is just an Excel spreadsheet. So, and then of course, it's just a giveaway. I mean, you can reach us with our contact here, and then we'll customize it, to suit your food business or your production business. You fill up all your raw materials, your product items, the recipe. The moment you get that, then you are good to go. So you can use this, you can customize this to work with your retail sales point. Most food businesses, what they do is at the front end, they have a retail software, or a cash register that is being used, to receive payment from the customer. But at the back end, this is what they use to evaluate their stock usages. So thank you very much. And please reach out to us. We want to get your comment. We want to get your feedback. And don't forget to just click and share with your friends. Thank you once again. And I'm waiting to get some feedback, some comments, some queries for more information. We'll be happy to respond to you. Thank you.